but very good day for the bulls, and we're getting a bull bar closing on its high. Overall, fairly good day for the bulls. We had a tight trading range on the daily chart, and I've talked about this. We've been fairly bullish for the past and for a long time. Because the rally was this strong overall, I thought the odds were against the market finding. I thought the odds were against a reversal down. And that increased the odds that whatever sell-off we got was likely to find buyers. And that's obviously what happened over the past few days, about 4 days ago. This is a strong enough reversal up. Odds are we're going to reach the all-time high in 7,700 round number. 5-minute chart, we gapped up on the open, and we had a fairly bullish day on Friday. And with the gap up today, at this point, it's a bull break out of bull channel. It's reasonable to think we'll go sideways, but the gap's not all that big. And something important happened. We ended up finding buyers on the very next bar. So now we have consecutive bull bars, bars 1 and 2. That is a strong enough reversal to the upside that the odds favor a second leg up. This is good for the bulls. Makes me think buyers below and a second leg up. And then we've got bar 3. 3, we have a pause, probably buyers below, and 1 and 2, I think still is strong enough that there's probably buyers at this point. And you can see the bulls got their second leg with 4, 5, and 6. Bar 6, it's 2 legs up, but it's a micro channel. And because of that, as far as traders doing anything right here, I think it's better for traders to, as far as bears, you got to wait for more selling pressure. Too much risk that the market's going to go higher. And then 7, we have a doji, not a good sell, probably buyers below. 8, we have a bull bar. That's good for the bulls. Still probably going to go higher. 9, follow through, good for the bulls. And then 10, we have a tail. So possible parabolic wedge, 1, 2, 3, but it's a micro channel. Whenever you get a parabolic wedge, that is a micro channel. That lowers the probability that the micro channel, it's a breakout on a higher time frame, and that lowers the probability that the market is going to get some kind of reversal down. We have another bull bar on 11, good for the bulls, still probably buyers, but at some point, the odds are we're going to pull back. 12, doji, and pull up Discord, not a great sell, still probably buyers below. And then 13, we have another doji. I still think odds are we're going to pull back. And then 14, bull bar closing on its high, good for the bulls, still probably going to go sideways. I think best case for the bears. And you can see starting to go sideways, getting an upside breakout. 18, 19, trying to go higher, but then getting pullbacks, still probably buyers below. I'm going to ask what the blue number is. The blue number is bar 18. It's 18, typically by bar 18. That increases the odds that you've seen the high or low of the day. So here's bar 18. And then you look down here, odds are we've seen the low of the day at this point. Probably 90+% chance we've seen the low of the day. And then bar 20, we have consecutive bear bars. Odds are, and bar 12 is the hourly. The end of the hour is marked in red. To answer your question, Frank, 20 is a bear bar. Consecutive bear bars, probably buyers willing to scale and lower. And you can see it's exactly what happened. And then we started to go sideways. And as far as doing anything here, can you sell the wedge top? No. I think the only thing you can do is buy and scale and lower or be flat. Bulls try to get the reversal up. Bulls got the upside breakout 28, 29. I still think buyers below scaling and lower. And you can see just really not ideal trading for the bears. And you can see it looks easy. You sell this high and you make a small profit. But look right here. What if you sold 24 and you scaled in? You got trapped on 30 and 33. Testing the moving average 33, but getting the upside breakout on 34 and 36. Trying to sell off on 38. What about selling it? Well, so far, every time we get close to the moving average, we find buyers. So what do you think is going to happen here? Probably going to find buyers. And in this case, we got closer to the moving average. Now is the first time all day the bears have been able to buy almost at the moving average. What do you think they're going to do? They're probably going to end up buying. I'm going to ask really quick. Okay, so real quick, these numbers. gray, you'll see it's an increment. It's basically bar 1, bar 3, bar 6, bar 9. The numbers are the closes of 15-minute bars. The red numbers are the close of hourly bars. Bar 12 is 9:30, so when this bar 12 closes, it's the end of the hour on the RTH. Bar 18 is the bar 18. You can go to the Brooks trading course and look up. There's a video about the bar 18. Typically by bar 18, you've seen the high or the low of the day. And that's why you keep seeing them alternate. Bar 24 into the second hour, 36 into the third. And you can see getting dojis 44 trying to break out to the upside. And the bulls got a strong reversal up, 45, 46, 47, 48. That's good for the bulls. What about buying it? You can, but remember what I said? If you're buying, we're probably really not ideal. You can buy it, but you're probably going to get a pullback soon. 49, it's a climactic bull breakout after smaller bars. And because of that, you'll have some profit taking. And then 51, we have a high one buy, good for the bulls, probably going to get a second leg up. Bulls are getting the second leg. And then they finally got a surprise on 55 and 56. What about buying it? Well, now you're buying even further from the moving average. That makes me think the odds are we're probably going to pull back fairly soon. They're probably going to pull back here and test the moving average. And bear bar 57, good for the bears. But every time we get a decent bear bar in a tight channel, it keeps getting bought. And you can see bulls he bought up here, scaling in lower 57, trying to get out on the bounce 58. And then we sold off on 59 and 60. This is what I was talking about. I thought the rally up here, and whenever you start to get really climactic on the day, typically, even if the market rallies higher, it'll pull back and then end up finding buyers around that same price level. Got up more buyers down here than sellers. And we got a doji on bar 61. Probably going to find buyers, and I still think we're probably going to test up to the high close. And that's exactly what happened over the next couple of bars. This reversal down was too minor, and this reversal up is probably too minor. So calling this a higher high major trend reversal is probably low probability. More likely, the best the bulls can expect is a trading range. And then we ended up going basically sideways for the rest of the day. Typical expectation. Whenever you get a strong trend, and this is the 15-minute chart, that is a lot of buying pressure. This is the RTH chart. That's a lot of buying pressure on this time frame. And it's always interesting. You can tell the market's moved really far when you do this, and you just basically insert the bars, and you can see, and these bars are tiny, but it's very strong. It's deceiving. These bars are big, more volatility, bull breakout, smaller bars, but almost parallel with this moving average. That's a sign of really strong buying. We're always in. It's basically always in short, always in long the whole day. You can buy the close of 1, buy above 1, better to wait for follow through on 2. And then at this point, there's really no reason to exit. You don't exit below 7. You don't have to get out below 12. Nowhere in here. You don't have to get out below 37, although you can. You don't have to get out below 57 or 58, although you can. And really the same with all of this. And at some point up here, and I think you can get out below 58 and then buy again lower, but really, I don't think you have to. And then limit orders, basically limit orders below everything, all the way up when it's a small pullback, bull trend. You can basically buy in almost any reversal. Buy the close, sell the close. You can buy the close of 2. You can buy the close of 5 or 6. And then other than that, maybe buy the close of 46 or 47 for a bounce. That's probably okay. And then other than that, I think it's better to buy reversal attempts. Buy the close of bear bars near support, such as the moving average. Okay, let me take a look at questions. Forgot to mention, but where do I think we're going tomorrow? We have a bull bar. It's possible that tomorrow is another strong bull bar, getting us to the all-time high, or, which I think more likely, will probably pull back. So we may have to pull back to around the midpoint of today's bar before we find buyers. So it'd be interesting to see. Will traders be eager to buy the close of today's bar, or will they see it more as a profit-taking bar and be more interested in buying a pullback? Someone said, how do you suggest you to start with an end-of-day review? Well, way back, many years ago, when I was watching out in the trading room, probably I think it's probably 2013 or 2014, someone messaged me. There's someone I used to talk to a lot on the Brooks Price Action website. We'd message back and forth. And they messaged me and they said, hey, I'm thinking about, they wanted to start a Google Plus group for any of you that didn't remember Google Plus when it existed. And I remember we joined, we started a Google Plus group and there's probably 3 or 4 people in it. And the idea was everyone was going to write a report of the Intraday review. And I don't like writing and I didn't want to write. And so my thought was, I said, okay, well, let me just record. I'm going to make a video of the Intraday review. And my thought was if I could just try and think more like Al, then that will help. And so what I started doing is, I started making end-of-day reviews and the person was like, hey, why don't you just post on YouTube? Maybe it'll help. And just started posting on YouTube. But really, I think, thinking through end-of-day, I think a good measurement of end-of-day reviews is really thinking, how long can you talk about the market? Can you just look at the chart and think through the details? So a lot of times, way back when I was doing those end-of-day reviews, I was really doing it, I was trying to speak audibly to myself, thinking and trying to find all the little nuances that I could find. The key is just starting with it. In today's chart, how would you handle add-ons when you're in the profit? Where would you add on? And where would you move your stop? It varies so much on the person's willingness to manage trades. If you're adding on to a trade here or here, are you willing to hold to the moving average? If you're adding on here, are you willing to hold to the moving average? It's basically the same thing. I talked about all that stuff. When you're in a bull trend, the odds of finding buyers on a pullback is really high. And therefore, if you keep adding to your position, and look what happened. You buy, you scale in, you still get out where you were. And so what I would do is you have to look at the chart. You have to understand when your premise is no longer valid. So when is your premise no longer valid? Well, if I buy here, confident we're in a bull trend or a trading range, even if we sell off to the moving average, it's still a trading range. And therefore it's still a great place to buy. If I buy up here and we're in a trend or a trading range, even if we sell off here, guess what? It's still a great location to buy. And that's what happened. So you have to be able to recognize when the market is in a bull trend. I looked at the whole, I don't remember what I did when I started out end-of-day reviews. I don't get bought. Someone's asking if you start, should you look at the whole day or just go bar by bar? Just try and just study the market. Just look and talk about the day. I think the biggest problem when, traders think about, how should I, it's like, I want to make my own PowerPoint slides over charts. How should I do it? Just do it in a way that makes sense for you. That's going to help you better understand it. The key is just looking at the chart and thinking about the market and what it's doing. All right, so I'm looking for a few more questions here, and I'm going to wrap this up. So if you want to sign up for the trading room here, just click sign up for the room. I just went to Brooks Trading Course, trading room, about trading room, and sign up, and then you should just be able to click it and follow the process. Now, the biggest benefit you're going to get from the trading room is you gotta actually, you're going to have to go through the recordings and study it. What helped me the most in the trading room with Al over the years were the Saturdays. The Saturdays, I listen to Al during the day, but if I'm listening and trading at the same time, one of the problems is you're only going to listen to the presenter on the things you agree with. That'll help you think about how to take a trade. You should really be thinking about what can I learn. And so a Saturday when the market's closed or at night when the market's closed is a great way to study and think about the market because you're not being influenced about what the bars are doing at that moment. So anyways, thanks everyone for listening. And I hope everyone has a great rest of their day. And we'll see who's talking tomorrow. And if I'm talking tomorrow, then I look forward to seeing you all there. All right. Thanks, everyone. I'll talk to you later.